InvestorIdeas.com podcast.
Good afternoon, and welcome to another episode of InvestorIdeas.com podcast, looking at cannabis news, stocks to watch, as well as insights from thought leaders and experts. In today's podcast, Investor Ideas interviews Matt Markiewicz, the managing director of the Cannabis ETF, trading on the New York Stock Exchange as THCX.
Matt, it's great to be able to talk to you again. So obviously we haven't talked in a little while. So if you want to maybe just fill me in on the last couple of months of how the ETF has been impacted, obviously by COVID-19, and maybe in the last couple of weeks since some earnings have come out, and I know some are expected to come out in the next couple of weeks, maybe what's been the most exciting or sort of influential earnings reports that you've been seeing?
Yeah, thanks for having me back on, Taylor. I appreciate this. It's good to speak with you again, and hopefully all the listeners out there are being safe during this crazy time. But yeah, it has been a wild few months here for cannabis companies. Whoever would have thought that an industry that's just operated in the shadows for so many years is now deemed as an essential business, not only in Canada but in the U.S. as well. And it's quite ironic that even though it's still not a federally legal substance in the U.S., that these businesses have remained open to a certain extent and been able to operate. Meanwhile, you can't even go to the gym to hop on a treadmill or an exercise bike. The gyms and dry cleaners and other things and restaurants and bars remain closed, but you can still legally purchase marijuana. So bit of an irony there, and it should not be lost on investors as such. But we can get into that a little bit. So yeah, it's been a crazy, volatile few months. The industry hit a bit of a low in the second, third week of March, along with the broader market. But again, after we did start to see a lot of cannabis businesses, deemed as essential. And we got reports of what you could call pantry loading in the form of excellent sales in cannabis. I think we started to see some optimism come back into the sector. A little bit of anecdotal evidence. I was in my wife and I were hiding out in Connecticut, having left New York to get away from what was going on here, and we were in Connecticut and stocking up at meat at the local butcher, and I had my THCX hat on, and the butcher says, nice hat, and he says, man, what do you think is going to go on with this virus? And obviously it was still early, people didn't know much, and I said, I don't know, but I'm hoping it's going to actually have a positive effect for marijuana sales. And he said, funny you mentioned that. I just drove an hour yesterday across the border to Massachusetts to stock up just in case they close things down. And it was a week or two later when Massachusetts closed walk-ins for cannabis sales. So those little anecdotes I always find from the consumers out there to be sort of interesting. And at that point I got this feeling that, hey, this actually could be in a weird way really good for and then some positive read-throughs through the cannabis industry. So and that's kind of shown through in the stock prices. After hitting that low in mid-March, the ETF is up close to 60% since then. And again, that's not uncommon for all of the other ETFs and a lot of the single names, especially some of the names in the U.S. So we have seen a nice rebound. I do think that a lot of the damage and the decline in cannabis stocks through the early first couple months of the year, minus a two week rally in early January, was a little bit overdone. So I think you saw some of that coming through. And we seem to have stabilized here in terms of the ETFs and stocks seem to be trading sideways a little bit. But which is I think it's important to be building that base, and we have seen a bit of a decrease in the volatility in the sector. But again, it is summer. You do have less market participants involved, and we can kind of see how things play out into the fall.
Absolutely.
In terms of earnings, as you mentioned, This was kind of the first big week for cannabis earnings reports. Obviously, a lot of the S&P 500 names have already reported, but we're starting this week and the next two to kind of in earnest get some really big reports. This week, of course, we had Aphria and Scott's Miracle Grow. We can kind of touch on those quickly. The week of August 10th up in Canada, Canopy and Tilray report. Next week, August 6th, sorry, not to jump too far ahead, but next week we have Kronos and GW Pharmaceutical earnings, which is, the only drug company to have an FDA-approved cannabinoid-based medicine in Epidiolex. So that's part of that stock has been part of the portfolio since we launched last July. In the U.S., the week of August 10th, we get earnings from Columbia Care, Harvest, Acreage, Trulieve, and Green Thumb. So that's going to be a major focus week, again, that week of August 10th, just for cannabis, in general. And at that point, a lot of, let's call it, household stocks, between whether they're in the S&P 500 or, it's up on the THCX, they kind of will have already reported. So who knows, maybe we might have a renewed media focus on cannabis earnings, which again should probably be pretty encouraging and based on the sales levels that we've seen the past month. So lot to digest going into these next couple of weeks here.
Yeah, absolutely. So maybe let's touch a little bit more on Scotts and Aphria and maybe what those earnings are sort of saying to investors. And is that bringing more confidence to this industry right now, or is it just maintaining stability?
So, yeah, this week, Scotts Miracle Grow, it's a New York Stock Exchange listed, company, and most people associate it with, golf courses or, fertilizer for your house. That's very distinctive, yellow and green box, that kind of has been around for, seemingly decades here in the U.S. Everyone seems to kind of have one of those in their, a 5-year-old box of Scotch in the garage at some point. But, this is a company that, is an ancillary play on the growth of the U.S. cannabis industry. And again, the fact that it's New York Stock Exchange listed does mean that investors can, a lot of investors can buy, can buy the issue. And it's been a holding in our portfolio since we launched last July. It's been anywhere as high as kind of 3 to always in the top 10. I think right now, Scotts is the 6th largest holding in the fund at just under 6%. And Scotts this week reported an absolute blockbuster quarter. They have a division, Hawthorne Gardening, where there are over 40 brands that are leveraged to the U.S. cannabis industry. That division, Taylor, saw sales grow 72% year on year in their fiscal third quarter.
That's pretty fantastic news.
It is. It's well above, what all analysts out there thought, that they would deliver. And this is on top of an already impressive second quarter where Hawthorne reported a 60% year-on-year jump in revenues. So the stock responded, very, accordingly. I think it was up, 12% on the day of earnings. They announced a $5 per share special dividend, and it's got some great momentum. And to me, obviously, it's one of the bigger holdings in the fund. There's also a very positive read-through from another company, smaller company that a lot of listeners may not be aware of. It's a company called Grow Generation, and Grow Generation recently listed their shares in NASDAQ in December. We added it to the portfolio in this February. It's the largest hydroponic gardening store. Operates 27 stores here in the U.S. They just completed an offering earlier in the month. Extremely strong balance sheet. Very capable management. They've executed on sort of everything they said they were going to be able to do. Grow Generation sells a lot of the brands that are under the Hawthorne banner, in the Scotts Miracle-Gro franchise. So again, I think it's an extremely strong read through for GrowGen. When they're going to report their quarter, and it's a name that I think investors should definitely keep an eye on. The stock's already up, you're close to 100%, this year, if not a little bit more, and it's had a great run. Wouldn't be surprised if it took a bit of a breather. But again, you have to remember that there aren't many stocks that have leverage to the U.S. cannabis industry that can be purchased by U.S. institutional investors.
Yeah.
I think I've mentioned on the podcast before that only around 9% of publicly traded cannabis market cap is owned by U.S. institutional investors. 9%. And that compares to around 80% of the S&P 500 that's owned by U.S. institutional investors, and 68% of the Russell 3000, so the 3,000 largest stocks. Yeah. So the money flow that you can get in other industries it's not come into the cannabis industry yet, the publicly traded names, because it's not allowed due to the federal illegality of marijuana in the United States right now, and that hampers investment. So you're not really seeing the level of interest from institutional investors that you probably would in any other burgeoning industry. So as a result, the names that are associated and have exposure to the cannabis industry that are not plant touching, and that's the issue, that large institutional investors can't invest in plant touching businesses in the United States. GrowGen is a step away from that, right? It's an ancillary business.
Yeah.
They sell products to home and commercial growers, right? And so as a result, again, they're not touching the plant, but it's a great way to have, to get access if you're an investor to the U.S. cannabis industry, but you don't necessarily, you may not want to own, plant touching stocks, or you're, prohibited from doing so. So again, the Scotts strong quarter, extremely strong quarter. I think it's a very positive read through for Grow Generation. It's only a $400 million market cap stock. So again, very much a micro cap issue. Most would sort of classify it as, I guess you could say at this point in time. But it's definitely one to keep an eye on. The other earnings that we had this week were Aphria, as you mentioned, one of the larger Canadian LPs. The stock had an absolutely stunning run up into earnings. So it was very much I don't want to say buy the rumor, but it was a buy the event, sell the news type of story. The quarter I didn't think was really worth a 17% drop when they reported this week. Obviously the market thought otherwise. You did see a bunch of analysts come out defending Aphria in the wake of earnings. And I had sort of agreed, like the market share that they won, that share expansion continues to sort of be, driving the story at Aphria. And it's, to me, one of the better names to own in the Canadian LP space, and very nice sort of positive operating cash flow that hopefully will be there pretty soon. I think there's some good visibility there. And I think they're making better capital allocation decisions. Overall, I mean, as of most of the LPs, but again, you have seen the stock stabilize after earnings, but it did have such an amazing run up, prior to that I wasn't shocked that you saw a sell off, but I didn't, think that a 17% drop on earnings day was necessarily warranted. So, we'll kind of see what happens there. But again, it was a decent quarter with, the read through for other LPs. As I mentioned, we have, Kronos reporting next week, August 6th, and then Tilray and Canopy reporting on August 10th. Somewhat encouraging, read through for some of the LPs that have yet to report.
So there's a couple things that I wanted to touch back on there. One of them is sort of, you touched on pretty much right away with Afria, which is that this industry has been pretty much heavily impacted by either over or under expectations of these companies many a time. You've seen that obviously for the first year, there was a lot of massive runs and then drops in a lot of these stocks based off of pretty much magical thinking for a lot of these companies of what they were going to be reaching and how fast they were going to be reaching these goals. But obviously a lot of that changed in the last couple of months and everything, and even in the last year. Have you noticed, or are you expecting that with sort of the market slumping because of international problems, the COVID-19 pandemic, reaching all sectors of the industry, of every industry really right now, are you starting to notice, Afria would be, I guess, a good example of maybe the opposite, but that some investors are now starting to have lower expectations for these companies, and then when they are hitting sort of more, I don't want to say mediocre standards or goals, but at least just achievable goals and standards, that the market is responding with, oh, well, that was at least better than we thought because we weren't expecting much right now?
It's a bit of both actually, and in part, I blame some of the research community for setting overly high expectations for the Canadian cannabis industry in general. At the onset of legalization, rec legalization, October 2018.
Oh yeah,
and listen, I think we've discussed that before in the past, and numbers just have had to come down. The problem is nobody really wanted to make a drastic cut in earnings necessarily right away and take all the air out of the balloon. So the market did it for them.
Yeah.
Right. And the supply issues early on in Canada's legalization movement hampered. Then you obviously now have there's demand issues, oversupply in the wholesale market, prices coming down. It's this maelstrom of, a lot of things that are out of individual companies' control. So as a company, what can you control? You can control, in some sense, expectations and, in your guidance. Cannabis companies have not been very good at doing that and setting realistic expectations themselves. But you can control costs. And quite honestly, costs were runaway early on in the Canadian industry in particular, right? So you're starting to see cost rationalization over the past 6 to 8 months as a focus for a lot of these companies, especially the larger ones. And it's encouraging. Do I think it's enough? Do I think that we're going to have to see more cost cuts? Probably, right? They need to adapt to market conditions a little bit better, and a little bit faster. That lag, it's like the industry was always catching up.
Yeah.
Right. And that to me it's obviously very indicative of in a nascent frontier industry that obviously having just been legalized, that exuberance, that over exuberance maybe that may have come into the space a little early on has kind of been flushed out at this point, and you can sort of get down to understanding individual company models and who the winners and losers are going to be, and again, part of that understanding needs to be, does management have a good handle on costs? Right? Where are they cutting costs in the next 12 to 18 months?
Yeah. And
are they doing it domestically in Canada? Take Afria, right? They're cutting costs. They're not going ahead with their LATAM venture.
Yeah.
Right. And so that just has to be, probably a little bit more pervasive around the industry. And you've seen it. You have seen, the cost cutting, to be a little bit more center stage. Unfortunately, as a growth industry, no pun intended, but you don't want to see cost cutting as part of a story when you're expanding.
Yeah.
Right. That's not the best sign necessarily. So it's finding that optimal, sort of area where the companies can grow to the level that the market expects them. But you do need to spend to grow. But if the market is not allowing you to grow, and that's been very particular up in Canada from regulations. We're making some headway in Ontario, and we're seeing more licenses obviously being granted, and store openings are getting to the point where I think it's a little bit more encouraging. But then of course, what happens? You throw a pandemic in here, and licensing process, for all intents and purposes, grinds to a halt. So there've been a lot of headwinds against the industry in Canada that are out of a lot of these companies' control. So again, you got to what can you control? You can control costs. So that's kind of what that story up in Canada is about right now, and cutting SG&A and cutting CapEx, and helping these companies get to a more profitable place.
So are you expecting to maybe see in some of these earnings or in some of these reports a little bit better sort of finances, as most of these companies have been forced to cut costs pretty drastically during the last couple of months just due to closures, not being able to have massive amounts of staff, not being able to have, it's not anyone's time to go build a facility right now because it's quite impossible to get the manpower to do that. Obviously with, again, COVID closures and all that stuff right now. So has that sort of aided along those lines for some of these companies, and that it's a much more justified, reason to cut your costs, and also you can't avoid it. You have to cut those costs right now.
Yeah. So it's something that of course they've been forced to do because of the pandemic. Sales in Canada, I think, have been surprisingly strong since March. We sort of kept expecting after the pantry loading that went on in March for things to kind of tail off. But we, both in Canada and the U.S., sales for marijuana have been extremely strong. And again, I think that speaks to not only the demand side of the equation, but it also speaks to this industry's ability to operate under duress. And I think that should not be lost, not only on investors, but quite frankly, government officials, particularly in the U.S. To me, I haven't heard one hiccup of, in the cannabis industry during this whole pandemic, right? And versus all these other industries that have kind of struggled. I mean, it's been, from what I would say, a near seamless move to delivery and curbside pickup models throughout this industry. And, all under the guise of, it's being done, legally. And, that's very encouraging. So, we still have obviously, Canopy, Tilray, Kronos earnings that are, yet to come here. Aurora at some point. I don't know if there's a date out for Aurora yet, but I'm not expecting, after seeing Organigram's earnings last week and Freya this week, I'm not expecting, any overly positive surprises.
Yeah.
On the top line from any of these LPs. And, the sort of narrative in this industry at the beginning of the year was it's going to be a second half story once we see 2.0 sales start kicking in, more products coming to market, hitting the shelves. You're seeing, different products, the breadth of product. Obviously, COVID has kind of slowed that down. But again, a lot from the sell side, the narrative continues still to be, more optimism in the second half. And, at what point is the patience from investors going to start wearing too thin if that second half story doesn't materialize, right? So you keep kicking the can down the road. Demand's going to come back. Prices are going to stabilize. it's very much a put up or shut up time. I think that when the third quarter rolls around for, the Canadian cannabis industry in particular, and it's going to be, very important to keep an eye on that. So I don't say that as a way of, kind of saying, hey, this quarter doesn't really matter. It's good to see, progress again on cost cutting measures. Companies really are not going to be giving any guidance, and nor should they, if they were smart, to not set expectations that might not be achievable, because quite honestly, who knows what's going to happen, with the pandemic. Will there be a second wave? Right. And this is the pandemic doesn't care whether, cannabis is being sold in the US or Canada. Right. I mean, it's a global issue. And the pandemic also doesn't care that there's an election in the US in November. A critical juncture, for cannabis in particular, the outcome of that election. And, the pandemic can just throw a wrench in all of that. So, again, it's I think there are a lot of tailwinds in the industry, but in terms of, the more company specific stories, I'm not expecting, especially in Canada, anything to be, blockbuster. The U.S., again, that week of August 10th, I think is going to be, a very big week. Sales, in most of the key U.S. states have been extremely strong. Out west, Illinois, of course, Massachusetts was a bit of a different story because they kind of closed the industry during the pandemic, and unfortunately that wasn't too encouraging. Still, obviously the rec market there is very new, but to the extent that Illinois, Florida, all these huge states where you have seen a massive growth in whether it be rec or legal medical markets. I think you're going to see some encouraging numbers from those few companies that we talked about earlier.
So I guess that sort of leads into another thing that obviously is, I'm sure, a pretty big discussion right now, especially within the U.S., which is sort of public perception and investor perception towards this industry, which has, in a lot of eyes, proved itself to be somewhat recession resistant. Similar to alcohol and gambling don't really go anywhere, no matter what the economy is doing. Now we've seen the same thing with cannabis, that there's, even though this industry, especially in the U.S., is looked at with so much instability, there obviously is some stability to be lasted through and still provide jobs and provide, economic stimulus, while you have a lot of options disappearing. Has that started? Is there an expectation, or what is sort of the expectation for this year for potential reform for cannabis laws or change to federal policies?
On the whole, I'm definitely feeling from investors that there's more positivity around regulatory and let's call it political signs that it's pointing in the right direction. Yeah. Right? The devil's going to be in the details at the end of the day, and you have a lot of people who are in the cannabis industry that feel like there's just not going to be enough done to bring the industry to where it needs to be in the United States, both on a social justice level and just on a capitalist level, quite honestly. But Rome wasn't built in a day, and it's still an evolving situation, especially considering where we've been the past 80 years with cannabis. This is an extremely critical and exciting time, of course, for the cannabis industry. And you have a couple of encouraging tailwinds, as I see it. In my seat, someone who's running a fund that invests in companies leveraged to this industry. The first is that this, and this is something that I think is, people are starting to get a little more momentum. And I don't know whether it's more of just, talking point or what, but this pandemic has left a lot of holes in local and, municipal budgets and state budgets.
Yeah.
And, the idea that, legalizing recreational cannabis could, potentially, provide a windfall of tax revenue, is, while I think in theory it's, correct, there's a lot that needs to get done. There's a lot of wood that needs to get chopped for that to happen.
Yeah.
And kind of get that enacted. And listen, how bummed is New York State that they didn't get it done last year in 2019 via the budget process, and then of course it was rumored to be included in the budget this year, and it got left out last sort of second because of they couldn't really focus on it because of the pandemic, and which was pretty terrible here in New York State. So, could have certainly used those tax revenues, when it would have been implemented here. So, again, in theory, it's a great idea, but the implementation, of course, is the second leg of the stool that, has to be figured out. So, and then there are other problems that need to be, sort of addressed now, especially with the pandemic. I think, getting schools open, for instance, and dealing with, if they are to open, the funding that's going to be needed, how's that going to look like? And so it's definitely a tailwind, the fact that, these revenues are needed from the cannabis industry, but I don't know, again, how practical it is. Again, and then you have the job situation. Unemployment is kind of at a level where I think people just never thought it would be. Let's say when we started the year, no one could have envisioned this pandemic impacting the economy in the way that it did. It would be nice if 250,000 jobs in the United States could be created. Additionally, based on a legal cannabis industry that was thriving here, and that of course could help, right? But again, that's not going to happen overnight. So, again, that first tailwind of the need to kind of plug holes in budgets, I think it's encouraging for the space, but not necessarily something that's imminent, in my opinion. Secondly, you have a growing, almost by the day, a sentiment that the Democrats are looking more likely to sweep the November election. Controlling the House of Representatives, taking control of the Senate, and of course the White House, and the polls are indicating that. I mean, you've seen that over the past several weeks, that there's growing momentum for the Democrats to sweep in November. And would it necessarily be more positive for the industry and stock prices, cannabis stock prices? Yeah, I do think it would be more positive. It would be a huge tailwind. But again, the devil would be in the details as far as how that would happen. When the Democratic Party a few weeks ago released their platform statement, 100 plus pages, cannabis was mentioned, I think 9 times in the document, and obviously legalizing medical marijuana was part of that. Was part of that platform. Again, that on the cover you think, oh, that's great, but then you have a lot of activists and lobbyists for the marijuana industry here in the U.S. I think that's it needs to go further than medical, right?
Yeah.
That it needs to go full rec, and we're not going to stop until it gets there. So and then you get in sort of to this internal debate, right? And the fact that this is becoming less of a partisan issue, that cannabis legalization is becoming, less of a partisan issue here in the United States, I think is encouraging. It's popular opinion is to legalize the marijuana in the United States, depending on what polls you look at, anywhere between 55 and 66% of Americans favor legalizing marijuana. And, that it's been increasing. Those numbers have been increasing over the past decade, but again, you're still not seeing the movement at the federal level that you would hope, especially for investors. Nothing can come fast enough, right? It's just always, it should happen yesterday. So everyone just needs to have sort of take a dose of realism, and maybe approach it with some skepticism, because getting overly exuberant about the industry and the prospects for legalizing here in the country, it tends to lead to an increase in volatility, of course, which doesn't really do anybody good. And I'm not to say that I don't expect good things in the next, couple of years. Again, I'm more positive than not, of course, than on the prospects of advancing the cannabis reform here in the United States. But I'm not saying go out and rush and buy every single stock, right now.
Yeah.
Right. So, you kind of have that, that political tailwind I think is very strong right now. So, as I mentioned in our pre-call, I do sense a bit of optimism right now that I really haven't sensed since we launched the fund past July. I mean, I'd say that the optimism and the amount of positive outlooks that we're seeing for both the U.S. and Canadian cannabis industries, it's fairly high right now. I just don't want it to get too high, again, because expectations get built in. And but again, the stocks aren't reflecting that. You are seeing the U.S. names outperform the LPs in particular, here, which rightfully so. But the stock prices aren't getting away from kind of critical levels, and I think that the companies that have the better operating models are getting sort of their due. But then you're also seeing companies like that are not plant touching, like Scott's and Grow Generation. That they're beating expectations because the companies are well run. They're not as beholden to regulation as the cultivation models. So for me, it's just about we're always espousing here, within our firm, how you want to have access and exposure to all the sub themes of the cannabis industry, right? Versus just putting your eggs in one basket and saying just buying the MSOs or just buying the LPs, right? You want to have exposure to extraction, cultivation, retail, the biopharma aspect of it, the testing aspect. And, we have a couple of companies in the portfolio, smaller weightings, such as Perk and Elmer, stock at a 52-week high. They blew away earnings this week. I mean, it's not, necessarily due to cannabis, but, they have a very strong cannabis testing, division and companies that are, involved in all these little sub themes of the cannabis industry. They should be a part of a portfolio. And that's, again, picking sort of one area of cannabis that's going to outperform others. I think it's, unless you're an expert, it doesn't necessarily, to me, that's not the best direction to take when you're looking to invest in cannabis.
So I guess then moving away from the States a little bit, when we're looking at the Canadian market, I know you talked a lot about the expectations for 2.0 product sales. Is that the main thing that really investors and sort of the industry is expecting this year? Or what does sort of the Canadian industry need to develop for that sort of investor sentiment to sort of rally behind it?
Yeah, overall, again, the year started out with a lot of optimism around 2.0 products, and has it gotten to the point where we sort of thought we would be? Probably not, right? And obviously the pandemic has hurt that. Has the breadth of product really been there to the extent that people expected? No. So I don't. Again, all sort of bets were off with COVID to a certain extent. Yeah. And everyone has dialed back expectations in every industry. And, I don't know what else really there could have been to point to in Canada when you started the year, other than, hey, this industry really needs these products. There's the diversity here to kind of take it to the next level and meet expectations and where we thought it was going to be, say 2 years ago. Right. And, it's, there's a focus on 2.0, but, I would say a lot of companies just at this point just need to start focus on getting profitable.
Yeah.
And, if they're running into walls on the demand side, it's, the branding is still an issue, right? I mean, to a massive extent. up in Canada, and the lack of any dominant brand. So there's obviously market forces at work there, but I don't the fact that the structure in Canada might not allow for dominant brands nationwide, right? That's also sort of an issue. So how are different brands going to sell in these fragmented markets, within the provinces, right? And the distribution models are different. So, again, this is it's very early on in the industry's life cycle, and investors are still trying to understand how that's going to look and how that's going to play out in the next couple of years. 2.0 is obviously going to be, and all those products are going to be absolutely essential cog into driving, growth and where this industry is going to take it. Obviously optimism around beverages in Canada was fairly high, let's call it a year ago even, right? That seems to be waning.
The big issue there is very little is out on the market. Most of your Canadian provinces have only access to 2 or 3 product SKUs. They're simple, they're basic, so it still hasn't really materialized, unfortunately.
Yeah, and that's that was probably not what people thought was going to be the case, right? I don't know how thriving people thought that the beverage market was going to be, but listen, I think that the 2.0 market has and how things have kind of evolved hasn't been exactly up to expectations yet, and we'll see how the rest of the year plays out. But again, it continues to be very much a show me story in in Canada, and I feel like people have an idea of the ceiling, all right, of what that annual sales number is going to be, like what based on what that run rate can kind of look like. Yeah. And there are a lot of players fighting for that market share.
Yeah.
A lot. And, in the U.S., it's a different story, right? I don't think there's no one has a great idea of what that ceiling can be. So that growth potential is just a lot higher down here, based on, the consumers that haven't entered the marketplace yet. And, it's just a more developed, mature, but not really mature market relative to other industries up in Canada at this point. So, product differentiation, branding, of course, that's all going to play into, how the broader story plays out for the industry. And, I suspect 2 years out, there are going to be a lot less players, right? I don't think anyone's going to disagree with that. And you'll probably have a bit more of a barbelled approach. There'll be 2 to 3, large players out there in Canada, and then you're going to have, let's call it some craft or just, smaller, more niche stories, amongst publicly traded companies, from the LP side.
Have you been,
so again,
have you been paying attention to like BC Craft Crow and any of those smaller companies that are focusing on that right now?
I haven't, because they're too small
Still
for
too
us
small,
to invest in. Yeah, as a reminder, we need a U.S. $100 million market cap for initial index inclusion, and it's just the liquidity, and you have to sort of always keep that in mind, when you're looking at building the portfolio here in this industry. So, they're interesting stories, right? But from an investability standpoint, it's not something that I spend much time on. I think, again, interesting stories.
Yeah.
Personally,
just not your purview right now.
No, not from an investment perspective at all. So, again, I'm sure there are some stories there, but that are attractive. But again, by and large, we're talking to a lot of financial advisors, registered investment advisors who are using a cannabis ETF as a very small percentage of their portfolio for clients that have a bit more risk tolerance, and that are looking for some growth themes in the portfolio. And it's again, they're not really thinking about picking single stocks. It's just way too early on in this industry's life cycle. It's again, like biotechs. I mean, you can hit a home run, a 10-bagger, or it's going to be a zero. At some point. And that type of risk as a financial advisor, as a fiduciary, is not something you necessarily want to take when you're managing clients' money.
Yep, you're not wrong there. So one other thing, just sort of in final thoughts, and it's a little bit more, I guess, off topic, if you will, but it is something that's popped up a lot in the last couple of months, which is I know it's outside of sort of the cannabis sector right now, but the sort of pop up of the psychedelic industry. And I was just wondering, obviously you guys, again, you have to have certain market caps, you have to have certain stock sizes and everything. Is that something that you're starting to pay attention to, of the next potential industry to create an ETF for or to be involved in?
It's interesting because we've actually had discussions, with investors here about our views on that market. It's still obviously extremely nascent, yes. Right? And in order for U.S. financial regulators to get comfortable with a product here, a listed product, there are certain requirements that have to be met. Again, from a size and liquidity perspective, and also, from a legality aspect as well. Yeah. And the psychedelics industry it's not there right now. There's definitely been a ton of media interest in it, of course, rightfully so. It's starting to gather some momentum. But again, from my aspect, being an institutional investor, it's a little just not on the radar at this point. And we'll see. We'll see how that changes. And it's a bit of like, I sort of want to learn to crawl with cannabis before we can even crawl with psychedelics at this point. And I don't know if the market is ready for that yet. It's maybe a little bit too nascent. I'm not saying that there's potential investment opportunity there, but from my seat and sort of how we imagine products, it's definitely a little bit too early. The simple fact is that there aren't too many companies from which to choose at this point.
Well, thank you so much for talking today. You gave, as always, a lot of great insight onto the industry and what's going on in the markets. And I'm sure every investor is going to be, or most that are at least paying attention, will be following those next couple of earnings reports going all the way up to August 10th.
Yeah, absolutely. Thanks for having me on, and look forward to connecting with you soon, Taylor.
Yeah, absolutely. You have a good one, Matt.
Once again, that was Matt Markiewicz, the Managing Director for the Cannabis ETF, trading on the New York Stock Exchange as THCX. To find out more information about the Cannabis ETF, you can visit their website at thxetf.com or click the links attached in the article. That's all for today's podcast. Enjoy the rest of your day. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.